Oh, we are live. Welcome back, everybody, to another Sunday Market Outlook. I'm your host, Roy Dunya. Welcome back. We're going to be talking about market news, fundamentals, data releases, and of course, I'm going to show you the trades I'm watching for this week. Why? Because I'm rocking the new Chart Addicts drip. This is not even new. This is from last year's FX Summit, but I'm rocking the Chart Addicts drip. Yes, I got the Chart Addicts hat. Supreme Chart Addicts collab. Am I pulling out the slippers again? Right there. Am I rocking the? Yes. And wait a second. Hold on, timeout. Who is that handsome son of a gun? That's right. That would be me. Members, you guys just saw me do that twice. Twice. Because I have to flex the merch. Because if I flex the merch and no one on YouTube sees it, that I flex the merch at all, that's an old Confucius line that you guys can take with you to the bank. All right. Welcome back to another Sunday out. If this is your first time on here, God help you. God bless you. Right? You found yourself in the right place at the wrong time. You understand? Okay. We're going to be going through predictions for what Jerome Powell is going to say at the Jackson Hole Symposium this Friday. We have FOMC meeting minutes dropping on Wednesday, which honestly not that exciting. Member Waller is speaking where? Summer workshop? Yeah, okay, you already lost me. Unemployment claims weekly, not too interested. PMI, also not too interested right now. Most important thing on the list is 10 a.m. on Friday, August 23rd. We have Jerome Powell hitting the stage at the Jackson Hole Symposium to give his basically outlook on the economy. Anything else? Yep. Kamala Harris has dropped her policy prescriptions for her campaign. And let me refrain from direct attacks. The Kamala Harris campaign has released a set of policy prescriptions to save the economy. And I have to say, absolutely horrendous. We're going to go through those piece by piece to show you why. And we're also going to talk about some of the current policies that are in place that honestly should be working fine if the economy was functioning, but it's not because we're in a period of stagnation. So before we even go through my predictions for what Jerome Powell is going to say on Friday, let's talk about some important recaps. We had a horrible employment print about a week and a half ago, which showed that the unemployment number in America had risen to 4.1% or 4.3%, which is tragic. The higher we get, especially anything above 4.3, once we start hitting 4.5%, 4.7%, that's where the Fed has to start taking decisive action to stimulate the economy. So right now, the employment situation is not looking too hot. And under normal circumstances, a jump from 3.6% unemployment up to 4.3 would trigger a Fed response. Now, the reason we're not going to get a Fed response is because we're still in this process of beating inflation, and the Fed doesn't want to respond too drastically, too quickly, and make the inflation problem worse by pumping too much money in the system. So they probably will not be as loose as people expect them to be. So unemployment took a massive hit. Now GDP came out better than expected. So the economy is still expanding. There's still economic expansion despite the stagnation. It's probably from all the money printing, to be honest. Just the total amount of goods in circulation didn't, I don't feel like that went up. I feel like supply chains have been constricted still, but I feel like the price increases contributed to the GDP more so than, let's say, like more sales. We didn't make more money. Everything was just more expensive, so it just looked better on paper. That's what I think is happening with the GDP number. Now, where's the positive news here? Inflation, baby. It's positive and negative news. Almost just knocked over my light, but that's my reflexes. Okay. If you believe the government's numbers, which get your head examined if you do, but if you take them at face value with the CPI print that the government puts out, then it'll show that's 2.9%. So we've broken under the 3% level. Now, as we've been talking about for the last 2 years, the Fed has a mandate to bring inflation back down to its 2% long-term target. 2% is a healthy place for the economy for some fucking reason. This is the rationale, right? I think this synthetic manufactured inflation is the dumbest shit ever. Because if we all took a vote here and we're like, yeah, guys, do you guys want prices to go up 2% a year? If we're like building a money system, everybody be like, fuck no. What? Everything should get 2% cheaper every year. I don't know. Why is everything getting more expensive? It doesn't make any sense. The only reason why you would want inflation is for asset inflation, but not for consumer inflation. You can't have one without the other, but we can talk about that later. So, long story short, we have a great inflation print according to the government, which, if they're using their own numbers to justify their actions, we have to take them at face value. Um, we have a horrible unemployment print, and then we have GDP still coming out stronger than expected. So it's a very strange mix of things. So what does this mean for the Fed? Can they cut 50 basis points in September, which is what everyone's expecting Jerome Powell to hint at on Friday? Okay, here's my predictions. He won't. Just like everyone was saying, 7 rate cuts going into this year or 5 rate cuts going into this year. Yeah, and I'm dating Halle Berry. 5, 7 rate cuts after we've only been doing quantitative tightening for about a year and a half. We've only had high rates for like a year and a half. Inflation was still at 4% where people were saying that we're going to have 5 or 6 cuts. Where? All right, so same thing. Jerome Powell's not going to hint at a 50 basis point cut. Matter of fact, he's probably not even gonna confirm the 25 basis point cut that everyone's expecting for the September meeting. He's going to say something about data dependent. He's going to say something about we don't comment on future meeting decisions, and he's going to kick the can down the road until the next meeting. If there's something seriously wrong with the economy, I think that's when he'll speak up, just like he did in 2022. If there's a genuine risk to the thing is, he got his golden scenario. He finally got inflation down under 3 at the right time when the employment market starts to crack. That was the signal for the Fed is keep tightening policy, keep taking money out the economy. Things are drying up until something cracks. And that something was supposed to be people losing jobs. The labor market was the signal, the trigger for the Fed to stop cranking, on the quantitative tightening or on the constricting the money supply. So long story short, Jerome Powell actually has a lot of leg room here. If we go into a recession, which basically knocking on the door at this point, the Fed has all the tools necessary to be able to dig us out. And because of the fact that we're damn near 5.5% Fed funds rate, they can drop 25 basis points every meeting for 14 meetings. Not 14 meetings, bro. Let me seven. I'm so stupid. 11 meetings. All right, 11 meetings at 25 basis points. Wait, I just fucked it up again. 25 basis points for so about 24 meetings. They can cut 25 basis points for over 20 meetings for the next 2 years. We got plenty of leg room. And they don't actually have to cut rates down that dramatically to get an impact in the markets and to stimulate things. It's just the optics, like just the visual of the Fed cutting rates or being in a rate cutting cycle will signal to the markets that easy monetary policy is coming and they'll put their foot on the gas. Okay, let's go through markets real quick. Anybody have questions about that? The Fed is probably going to cut 25 basis points. Whoa, whoa, whoa. Whoa, whoa. We froze up. What happened? Okay. The Fed's probably going to cut 25 basis points, but there's still no guarantee because they don't need to just yet. The problem is with the Fed is that if they wait too long and then they wait until something seriously breaks, they're going to have to get aggressive when they step in. And that's just going to make the inflation problem a whole lot worse. It's going to restart the whole clock for them. So I think what they want to do is act decisively. They want to signal to the market that they might cut rates. This is what I would tell Jerome Powell is signal to the market during the Jackson Hole conference that you may cut rates. Let them think that you're going to cut rates. When time comes around, actually cut rates. So you're not going to have this big reaction in the September meeting because people have already been buying for the last month and a half in anticipation or the last month. So and then make sure that everyone understands that this is not the norm, that we're doing this to try to alleviate some of the pressure and start to move in a positive direction, but we're not going to sit here and just start cutting rates left and right. And I think that'll normalize market conditions. But then again, what the fuck do I know? He's going to go up there and say data dependent 50 times, and we're still going to have high prices. So back to square one. Isn't finance fun? Isn't economics just a blast? So gold has officially hit all-time highs. Last week we broke 2,500, which was my long-term target. Magnets really don't lie, do they? Magnets do not lie. Wow. What is going on? What goes up must come down, people. But if you know anything about gold, is this thing typically moves in twos. So we've already had this massive impulse up. We got this correction. What I would do is, and this is just people are like, well, how did you find this? And how did you find that? Sometimes people, you have to spend 7 years doing a fucking thing to be able to just like know what to do. And obviously, some days I'm better at explaining than others. Some days I'm just like, bro, I don't know. Just because, right? I don't care. I don't really care how I found it. I just know for a fact that I'm looking at the right thing. And that's called subconscious competence. It's when you have all this information that you know this stuff, and you get to basically just the more you turn off your brain and actually just do, the better your outcomes seem to be. And a lot of the time, that's what I'm doing when I'm trading. Let me use a combination of just a general A, B, C, D kind of style pattern. Some Fibonacci action here. Interesting. Very interesting. Huh, this could work. Oh, wait. Not bad. Not bad, not bad, not bad. Let's get in here. So right now we've had this massive impulse, and we're kind of starting on this three drive sort of pattern up here. We have one, two, potentially three. And this sort of like more aggressive third pump is the one that leads to the correction. So I think that we're going to see this bullish spike up. And as it gets more aggressive, I don't know if we'll hit the 25.42, which is kind of my second run target here before we do the correction. But that's a very likely possibility too. Tomorrow we'll very likely just see a range right here. The market's going to pop out of the range, come back in and retest. This is a situation, by the way, Christine, where if the market just keeps respecting the support, then it could launch from here. But more than likely, if it breaks under and everyone's lost about whether it's going to drop or not, this is the breaker, right? So when do I know to move my fib? Basically, once it breaks the level. I guess that's about the easiest way I can say it. Once it breaks level one, move the zero, the bottom of your fib down to the next one. Okay. And if it comes down here, you see a low rejection, it hits TP1 and then crashes down. Take the low of your fib, move it. You get what I'm trying to say? All right. So nothing too crazy on gold. Gold's still headed towards the upside. We've been bullish for quite some time. Can't look at gold without looking at the DXY, the dollar index. Are we live on YouTube? Glad I caught that gold buy when the setup was on the money. Thanks, Sham. Good stuff. I want to sell gold this week. Oh, Lord have mercy. Are we live? Yeah, we are live. Make sure to drop a like on the stream if you guys are watching this. It would mean the world. Not to me, but you know, somebody. No, all jokes. It would mean a lot to me too. By the way, shout out to you guys. Shout out to you guys. We hit 70,000 subs over the weekend. Y'all are lit. Thank you for the continued support. Yo, what? Was that a bomb? Sure, I just got PTSD from Lebanon, bro. That did not sound like thunder. That was one of the most fucked up sounds I ever heard. Anyways, I apologize for the cursing, y'all. Just that one startled me. We'll get up to the higher time frames here. DXY headed back down. DXY stands for why. Like, why are you still dropping? What's going on? I'll tell you guys, my prediction for why the DXY has been dropping is the same prediction I had a few weekends ago when I did the Sunday market outlook, and I showed you guys the M2 money supply growth. And I showed you that there was like $2 trillion that had been introduced into the M2 money supply globally. And I think there's an expectation that because the whole world is on a rate cutting cycle now, like everybody's rate cutting at the same time, that we're going to start to see uh not like euphoria, but we are going to start to see some optimism in Q4. So in the first half of Q4, I think it's going to get pretty ugly. But then once the money really starts getting pumped in and it starts to find its way into the economy, more lending starts to happen. Companies are buying back their own stock. There's hiring happening. Easy monetary policy starts to kind of become the sentiment. I think that's when everything else rebounds. Right now, the market, the DXY is dumping because when you oversupply anything, a currency, a stock, whatever it is, too much supply, not enough demand, market drops. But this is all short term because the whole concept of there's not enough demand for the dollar, it doesn't make sense. The dollar has the most demand out of any currency in the world. Most global trade is settled in US dollars. The petrodollar system, the entire oil trade of the globe, is transacted in US dollars. It's the global currency of like a medium of exchange, which means it's a common medium between anybody around the world to transact with. Most of the world's sovereign debt is denominated in US dollars. Yeah, the dollar is pretty important, right? And people always need more dollars because even if you have liras or yen or whatever your local currency is, the only reason it has value is because you have the dollar in your bank, basically giving it leverage or collateral. You're staking your dollars to be able to give your monopoly money value. So everyone always wants dollars. There's always a shortage, no matter how much they print. But this is some release, and we're seeing stocks go up, and we're seeing Bitcoin start to recover a bit. It's not hard to track the money. Follow the money means if the dollar is dropping and you see high risk assets going up, gold, not a high risk asset, more of a safe haven. Bitcoin's recovering, but I really want to see more downside to the 30,000s, more downside to the 30,000s for Bitcoin before we recover. So that's still loading. Obviously, stocks, massive recovery on Nasdaq. So we can see that the dollar's dumping, but US assets are still doing well. And so this is not a vote against America. This is a vote against holding the US dollar, which means what? The market is expecting money printing to happen. They're expecting the devaluation of the dollar again, and they're getting into assets ahead of time to try to dump this currency that's going to get oversupplied. That's what, if you look at the correlation between all these different factors, that's what the market is telling us. All right, let's take a look at NASDAQ here. I'm going to use a clean chart at first before we continue. Chart Addicts members, come on. Come on. Talk about a Model 1. Talk about Model 1. Y'all seeing this? All right. See what we got. All right, guys. I lost my the mat thing that I have on my fucking on my desk, and I'm literally just sitting here scraping the mouse all over my desk. So I'm not moving as fluently as I normally would. I'm over here moving like you know what I'm saying? I got that Joe Biden speed right now. Give me a second, bro. Bear with me. Was that fucked up? That's fucked up. But he's not even the president anymore, but they did him dirty. I'm gonna leave Joe alone. I'm gonna leave Joe alone. All right? That was unnecessary. That was ageist. That was like just discriminatory. Do you use the DXY when looking for Bitcoin opportunities? No. Bitcoin is directly correlated with the Fed's balance sheet and global liquidity. So I use the global liquidity index and I use the Fed's balance sheet to use for correlations. That's what I do. Focused. Focus, people. What else have I got? I got support resistance here. I'm just doing this from scratch, try to get a fresh perspective here on the higher time frames. Says the 86 is right here, but I'm gonna just have to say the market's wrong on this one. Or I'm drawing my fib wrong. Yeah, no, the market's just. Oh, this is Pepperstone. I forgot. I'm gonna do the same exact thing here. I'm sorry, y'all. I didn't. The fuck I'm using Pepperstone for? We got some self-respecting brokers on this side, people. What we got here? Interesting. That's why we use zones and not lines. All right. Now, some of you guys don't know what the hell I'm doing here. Make sure to sign up for the NASDAQ Masterclass. Link is in the description. You're welcome. If you guys are in Colombia, by the way, Colombia workshops coming in hot. If you're in Medellin or Bogota, well, I just went dark. If you're in Medellin or Bogota, make sure to register for the event before it's too late. Saturday, August 31st. We're headed down to Colombia. We're doing 1,000-person event in Medellin and 1,000-person event or a 500-person event in Bogota. Make sure to register. See you there. If you guys are going to be coming out to the FX Summit 2024 conference, make sure to use promo code ChartAddicts at checkout. All right. So we're on a Wanda chart now, self-respecting broker here. Still the same shindig. Maybe even worse. This is worse shenanigans than what I just saw on Pepperstone. Yeah, I'm not a fan of this. Okay, anyways, I want to be as accurate as possible, but I guess this is one of those times where you're going to have to use the higher time frames to be roughly accurate, use the smaller time frames to get effectively and strategically accurate. Well, this is actually let me actually just give you guys the summary here just so you guys can get out. You guys can go home. We got this big impulsive push to the upside. Okay, and then now we've just started to form a new range, which is this right here. Here's our box. Okay, so much like we teach in the masterclass, prices ranging. What most traders have the inclination to do is to trade momentum. Okay, we always want to wait for a correction. So we're going to be looking for a correction back down to these lows so we can go, for buys. And then I'll be looking for potentially, so it's either this or this. All right, same exact trades that we had lined up last week. Those prices on the Owanda chart, you guys can go cross-reference this with whatever platform you're using, whatever broker feed that you're using to make sure the prices are accurate. But interesting. Very interesting. Huh. All right. This is what I got. Any questions, comments, concerns? Oh, Roy, how do you know which one it's going to be? You don't. Welcome to trading. If you guys want certainty, go become an engineer. All right. Some of you guys get on these channels. You guys sign up for these free telegrams and these Discord groups because you think someone's going to give you certainty in this game. There is no certainty in trading. All right. If you want certainty, go get a job. You'll certainly be miserable. You'll certainly get paid every 2 weeks. I'll tell you that much. Trading is about probabilities. And I saw a few people shitting on the probabilistic mindset online. You can abuse any philosophy for trading. You understand? If you're going to be talking about probabilistic mindset and use that to YOLO your account or use that to be like, oh, I don't need to be accurate, like it will win or it won't win. That's not what the fuck we mean. Probabilities means that you have to assign a percentage likelihood for every action. What's the chances the market breaks out right now to the upside with no retracements? What's the probability the market comes down for a shallow correction? And then what's the probability the market comes down for a deep correction? And then what's the probability the market shoots up and then comes down for either of those? You understand? And so now I'm thinking to myself, okay, this is about 30, 30, 30 for all those, evenly split probability. And then the market starts to come down. Okay, well, if it's coming down, clearly it's not going up. So I'm eliminating that option. I'm certainly eliminating that option. I'm not probably eliminating it. I'm definitely eliminating it. And so through the process of elimination, you can assign a higher order probability or higher order likelihood to individual actions. But if you're looking for certainty, go become a doctor, go become an engineer, go become a lawyer, but definitely don't think about trading. If you're open to living a life where you understand you have no control over what happens next, but you can fully control your reaction to it, and this is a game that you are willing to play and that you are committed to play, welcome to the good side. This is where the best development of your life will come from. Trading will force you to grow. Otherwise, you're not going to make money. Okay? Put something in the chats if this is good for y'all. We're going to be going pretty crazy this week, having streams all week. Till then, this should be good to go. With the discipline you display in your work and high quality content, it's easy to break 100K subs without a doubt. We just have to be more consistent. We don't really have as big a team as we used to because I realized that it was kind of it's just not as productive. But we do need a full YouTube team. Make sure that we continue to post. Like right now, this is really just passion projects. I post out things that I genuinely want to do. That's why like some videos will get like some of the best videos on the channel have less than 5,000 views, which is mind blowing. But those are when people ask me like, "Yo, what are you most proud of?" It's not the million views on a video or the 500,000 views on a video. I don't give a fuck about that. It's the conversations I had with Bob Elliott where I held my own for 2 hours, asked so many engaging questions, and learned more about economics in that hour and a half that I will for the rest of my life. That's the shit that I live for. And so this has been a great passion project, and I'm glad that it's become successful. And if we want to break 100K people, I promise you on everything I love, we'd break 100K in a month or two. If we genuinely wanted to, all I'd have to do is game the algo. Better thumbnails, make video concepts and titles that are more engaging, like I don't know, like a homeless guy makeover on the street, and then we teach him how to trade Forex. He YOLOs an account, makes 10 bands, and we give him the whole 10 bands, and then he gets a house. That video would do 400K views. We'd probably scoop up a good 10, 15K subs off that. You guys get what I'm saying? Why the fuck am I going to teach a homeless man to trade Forex, bro? You know what I'm saying? Like, I love the idea. Don't get me wrong, bro. Y'all think that's a productive way to solve that problem? If you genuinely cared about helping homeless folks, or you take that 10 grand from your trading, you go leverage that and lock the fuck in, you go make millions and you go open foundations to really rehabilitate folks, do retraining and get them back in the workforce. Right? Do something fucking productive, people. But people want us to, you know what I'm saying, game the system and all this. We know how to do that. But I refuse to be a sellout. I'm just saying. So I'm just keep cursing on these streams, getting demonetized by YouTube and taking our chances. You know? Beautiful thing is we can win with both scenarios. Yep. What should happen for you to expect the higher time frame correction like the H4? Really good question, honestly. Is Jerome Powell starting to worry about the employment situation? Because whenever the Fed cuts rates, immediately in like the month following that, the 30 to 45 days, markets tend to drop. So I'm expecting the market to correct here regardless. If we see a September rate cut, I am expecting some kind of correction here. Let's actually look at the CME Fed Watch, which we went through last week, but it's always good to have a refresher. 30 days until the next Fed meeting. That's a long time. We also have, I'm pretty sure, a GDP print right before the next Fed meeting. We have preliminary GDP. Okay, that's a big one. That's a big one, big one, big one, big one. Let me see what else. We have a jobs report and an inflation print. Yeah, we're gonna have three really big releases before that Fed meeting. And so plenty of time for things to change, for the data to change, and give us a better idea kind of how to play this. Regardless of what the fuck happens, the markup is right here. It's only gonna do one of three things. Like it doesn't fucking matter. If one of those things happens and it drops, you really don't need to know because you never will know the reason for why price moved. You can have an idea. You can try to correlate things because it sounds good. Like, oh, this event happened and this thing and the price dropped, so they must be correlated. Maybe not. Maybe somebody just timed the order based on the news, whatever, whatever. So, anyways, regardless of what happens in the outside world, if you have a good technical system, just trust the technical system. Look out for the signs. If it doesn't reject, respect, and retest the zone, then don't just enter. If it bleeds through and fills the candle, if you see a recovery up, you don't know that it's going to do a full recovery. Sometimes you have to take chances, people. That is trading. And so manage your risk and have a good risk system, and you'll make money. If you don't have a good risk strategy, then God help you. Alrighty. Good stuff. Good stuff. Awesome. Make sure to click the links in the description. Check out the NASDAQ Masterclass to learn how we trade NAS 100. Wait, probabilities real quick. Make sure to check out the links in the description to learn how to trade NAS 100. We have a 75 basis, we're a 75% chance of no rate cuts in September right now. What? November rate cuts. Interesting. All right, y'all, take it easy. Make sure to check out the FX Summit. Come out to the #1 conference in the world. We're going to have 5,000 people or more at this point coming out to Dubai for the world's largest gathering of traders every year. It's the #1 annual event for traders to come out. It's also for investors, entrepreneurs, and crypto. So if you guys want to learn about the future of finance, where markets are going, where the technology is going, where all the platforms that we're using are going, and who to trust, and which ones are going to be the next big players, this is the place for you to come and meet the people actually building the future that we're all going to use. If you guys are in Colombia, Medellin, or Bogota, make sure to register for that workshop. Use promo code Chart Addicts, or no, use promo code CA LATAM, Latin America. So LATAM. You guys can use CA, that's for Chart Addicts, LATAM, for free tickets to the workshops in Colombia. We'll be coming out to the UK. We're going to Lisbon, Portugal, Barcelona, Madrid, Lebanon, and then we're going to be doing 2 or 3 workshop events in Dubai prior to FX Summit. Look forward to seeing you guys out there. Happy and safe trading. Take it easy. Peace. All right, people. We'll do a full sweep tomorrow. A lot of stuff going on just in terms of Iran attacking Israel, where we're at with